Hi, this is Stephen Carter, Executive Director of the Cultural Center of Charlotte County. Thanks for joining us today on YouTube. With me, I've got William H. Wakeman III. Bill, if I can call you Bill.
Yes, sir. Good morning.
And Bill is a benefactor of our theater. It's the William H. Wakeman III Cultural Center Theater now. And he has extensive background in financial planning. And I know there are a lot of tools in the tool bag that you can use when it comes to helping people with their investments and how to save money and save taxes and a lot of different things with your expertise. So when you're talking about that and talking about charitable trusts, you want to give us some details on charitable trusts and tell me about that?
Yeah, I'd like to refer in general to what we call tools, financial planning tools, methods of avoiding taxes, retaining wealth, protection against creditors, and so forth. So there's primary tools that we use. There are all different variations of those tools, but the three most prolific, I guess, and least understood techniques are using charitable trust, charitable lead trust, charitable remainder trust, foundations, family foundations, things like that. Uses of retirement plans in ways most people don't understand that they can be used, and quite honestly, insurance contracts, especially life insurance contracts that offer creditor-proof, tax-free accumulation. So those are three of the main tools that can be used that people usually don't understand, and they're powerful tools. It's unbelievable what an impact they can make on an individual's life. So,
but let me ask you, do you find that when you're talking to people about their planning, are they somewhat familiar with charitable trusts, or is it not that widely used the way it should be for people, or what's the understanding of most people?
Very rarely understood, and it's because there's not that many professionals that actually train on that subject. They're not that complicated. They're perceived as being ultra complicated, and so it's just not common for CPAs to offer or focus that as a tax planning tool. Most insurance agents aren't trained in it. Most brokers are not trained in it, and it's just not common. But it's a very, very useful tool. IRS is very recognizes the value of that because they'd rather you direct your funds ultimately, either currently or at your death, to go to charity. And in fact, that's why they give you all the tax deductions and benefits that they give you, is because they're going to one way or another require you to redistribute your wealth. And they'll either redistribute it for you, or you can choose to redistribute it the way you choose.
And I think most people would much rather do it themselves.
Absolutely.
Once they understand what the basic rules. So you work with a lot of other folks that are investment counselors and so forth out there, and the expertise that's a little more involved and more detailed than what they're normally dealing with.
Yes.
On a day-to-day basis.
And the thing is, like I said, they're not that complicated, but again, there's not that many professionals that are trained in the area. So I'm always very happy to work with an individual's existing advisors. I'm happy. I like to work as a team with the CPA and the attorney. I find quite often that the CPA and the attorney that they're dealing with doesn't necessarily have expertise in that area. So basically what's common is I'll try to work with them and give them whatever information that they require for them to understand what it is that we're doing, what's been recommended. But I also have some go-to professionals that I use that can partner with the attorney that they have or the CPA that they have to help implement it.
Okay. Now, on the different types of trusts, for charitable trusts, are there are different, 2 or 3 main different ones? Is that my understanding? Is that correct? Or?
Yeah, in general, now this is a simplification, but charitable remainder trusts are going to be used to provide a tax-efficient way for you to sell existing assets without paying tax, and the proceeds of the Charitable Remainder Trust provide an income for a designated period of time or for lifetime for the individual, or for the individual and a spouse, or for the individual and a child or partner. So it is something, exactly what it says, a remainder interest. It provides an income while you're alive or for that specified period of time, but at your death or at the death of 2 or 3 individuals who's ever being provided the income, the remainder interest goes to a charity of the donor's choice. So then there's charitable lead trusts, which actually accomplish the same thing, where an asset is sold and there's no tax. The income in that situation is actually going to go to the charity. So the benefit there is that if they're wanting to provide an income now instead of a lump sum at their death, it provides an income now, and meanwhile the asset appreciates, and at some point in the future, that asset reverts back to the donor on a tax-favored basis. So that's a very powerful tool for somebody, especially if that person is already giving. If they're already giving, they're not out any money. They're still giving what they gave before, but they're getting benefits as an individual from donating that asset. So those are the 2 most valuable tools in the charitable trust.
So do you find that when you're explaining those, it pretty much, does it depend upon what stage in their financial life that they're in, or what they choose, or does it really make any difference between those 2?
You know, whenever I go to give recommendations after reviewing an individual's financial profile, it's one of the methods that's incorporated, and essentially I explain it at that time.
Okay. Now, if someone wanted to get in touch with you, how would they get in touch with you?
Well, the name of my company is Diversified Financial Partners. We have a website, diversifiedfinancialpartners.com, and I have a telephone, which is 863-529-3465, and that is my cell phone that gets directly to me wherever I am in this world.
So with me today has been William H. Wakeman III, the namesake for our theater now. It's William H. Wakeman III Cultural Center Theater. He's our benefactor. We've been talking with him about charitable trust. We're going to take a short break. I'll be right back with you on the next segment of our YouTube channel. This is Stephen Carter, Executive Director of the Cultural Center.